Wow, who the hell is that? That's right, it is me once again, Hunter FX. I'm back without glasses this time, and that's because I'm wearing contacts. I'm about to head out for the weekend, but I would like to get a quick video in teaching you guys how to use the Fibonacci retracements actually properly, and my point of view on them, and why I don't think that they're actually really needed. But they can be useful if you follow these rules. Tune in, let's do it. Alright guys, so normally I know that you hear it, you've heard it everywhere else. I'm giving you a little bit different point of view, and I'm going to adjust it a little bit here to what I would actually be using it for if I did want to use the Fibonacci. I generally do not, but we can some points. So what you've heard before is you see a rally like this during a day, and then you want to take the 618 to the 786, that sort of zone, as a retracement, and then that's where you're going to be putting your buy orders, or you're going to be at least watching for reversals there. So maybe you would watch for a reversal here. You would say, okay, it reversed, it looks like it's going the other direction, and then you'd place your stop below and you'd target highs there, and you know, in this case you'd be right. Fantastic, who cares, not a big deal. So how would we actually want to use it then? Well, what I'm going to suggest is what you do is you place it on in such a manner like this, and then you jump down to a lower time frame if there's not an obvious order block there. In this case, I would normally be looking for an entry right around an untested order block. So what I mean by that is this area right here is an order block of consolidation. Rather, this is the order block right here of that's the actual zone that it consolidated, and that's the area that it lifted off from in a stair by stair type manner, right? But then it came back down and it retested it, gave it another shot for more people to get in on the trade, and then it continued up to the upside. Now, I've now deemed that as tested, and no longer is it very useful to me. In this case here, I see no important levels for us to be buying on, so that's why I've just basically said, why don't we just go ahead and look at the lower time frame in this case and see if there's any levels. So in this case, we can see right at the 718, we actually see a level right here. And I'm just doing this on the fly. We'll see if it's somewhat accurate there. And we'll draw just a ray here of where that top level starts and see if it actually touches to the entry, and it does, and that's where we would then want to be looking for. So we're looking for the most prominent untested level in that range. So maybe I've drawn this slightly wrong, some other people might have drawn it a little bit differently, but it's close enough to that 786 area that we're going to be looking to get in on, and that's our optimal trade entry, right? I think that's a ICT term, optimal trade entry, or you know, it's just the optimal point that you want to get in on the trade, right? So that's that level right there, and you can see we would have actually perfectly guessed that. Let's look at maybe another example. So literally, I've just scrolled the chart over. Let's see if this works here. So this is our initiation point and our rally. Now, what do we see? We see an order block right here inside that range, right? So let me just delete this blue thing so it's a little bit out of the way right there. We're now looking for an untested area that we want to enter on. And it looks like this bumped off, right? Little bit of bumpers. A little bit of jumpers, a little bit of boing doing doing. I don't know what that's supposed to mean, but let's just roll with it. And then we say, okay, this is the area that's untested, right? That's where we jumped off from, right? You can kind of see that. Let me delete that line there so you can kind of see it a little bit better. And you can say, okay, that's probably where we wanted to jump in on our trade, and then we'd be putting our stop maybe below that low, right? And that we initiated off of. So I literally just looked right there again. That's kind of where the Fibonacci is retracing to. And generally, I'm just going based off of these untested levels once again, but we're using the Fibonacci to look for where those untested levels, the best untested levels, are going to be. And that's how I would use them essentially. Now let's refine it even further maybe, guys, and let's look at a situation where I would actually really like to use this. So literally, guys, I tried to look for another pair there quickly, but I realized that it was literally just the very next day here on the exact same Euro USD. Literally the very next day. Let's look at kind of what that looks like. Since I'm trading only the New York Open now, I'm refining this to be even further. So we're using this on a smaller time frame. So let's just jump down to the 5-minute here. And this was yesterday. So we can see how this kind of reacts. And we can say that as we're coming into the New York Open for a day, let's just put our Fibonacci movement here, right? We'll draw that up to the top, right? And to the bottom. I think I need to adjust that just barely slightly. Just a little bit of barely slightly, right? And then this is an example of a situation where there's no order block once again, but we're seeing that we maybe want to just jump down to an even lower time frame and see what that looks like, maybe on the 1-minute. All right. All right, so this is an example where the actual order block that I would be looking for is what we would be calling a breaker over here, right? So this is our breaker because there's no actual order block of interest. There's no consolidation on this side. There's no demand zone of interest that is around that area. This one's a little bit too low for my liking. Then I would put it a little bit higher and I would use the left hand side there. It's basically the movement that caused the stop outs there, the sweeping before the actual rally. So that's where we'd be looking for. And in this case, I wouldn't have actually entered in that trade, but you can see that it still did end up in that range between the 618 and the 786. Let's just look and see if we can find another example of a New York Open type trade. All right, cool. Again, guys, literally just jump to the very next day. We're looking at today now. This works in some way most of the time. You have to use the same sort of logic each time, but you have to make sure you're figuring out the right direction. And that's going to be the major problem you guys are going to run into, is you might pick the wrong direction. So that's why I'm advocating that you're following the trend of the day. Right? So if you're seeing London is going into the right trend, the downtrend, then you're most likely going to be looking for a downtrend unless you see major signs of reversal, major sweeping of levels, things like this. So as we're getting into the New York Open, we say, okay, what's the move that's bringing us into that open? We say that's the move right there. And then we say, where's the order block that brings us into that zone, right? So we see this is the important order block of untested action. There's also one here. So there's two options essentially, but you can see both kind of worked because you can say, okay, I would have either entered here on that order block because that's a decent retrace. It's not quite in the range. That's a little bit sloppy entry, but the nice perfect greedy entry would have been on this wick right here on that order block, right? Right, so let's just draw out what that supply zone looks like. It's from there to there. That's that supply zone. And then you would have been able to enter immediately perfectly on there with a little bit of a stop right above, following the trend of the day, looking for new lows. Let's see, just out of curiosity, if it did it again during the New York Open. So we say during the New York Open, we say, okay, that pops down to there. Where's our untested order block from within that range? Well, here it is right here. So maybe we would look for an entry right there, right? And then we put our stop above. You would still be good and you'd still be able to ride that trend. This case, it actually happened twice today. You can use this so often. You really just need to find these high volume pairs. You want to find great trending markets and then decent pullbacks into untested order blocks. So simple, guys. All right, guys, hopefully my face without glasses doesn't freak you out. It kind of freaks me out when I'm looking at myself on the, the computer screen right there. It's a little bit weird. We got a cat for you here. We got some knowledge. We got everything you need to make you laugh, make you smile, make you smarter, make you money, whatever you want. Hopefully that was great, guys. Just remember, this is absolutely very powerful. You're just going to use it kind of as a guideline to find these untested levels, and then you're going to wait for the reaction off of those levels. Or if you're just following that trend, You can just place a limit order if you do prefer the limit order. I'm more of a wait for the confirmation on the lower time frame type of guy. Some people, they just like to do the limit order. Limit order is good if you can be very, very precise. This is kind of a situation where you do want that very strong precision, because a lot of the times it just kind of comes in and goes away. So you have to be very, very quick with it. Guys, that's everything I have for you today. If you like the content, please make sure you subscribe and make sure you hit that notification bell so you can hear all of this juicy, juicy juice, really. And if you want more knowledge, join the Discord. Links in the description below. See you guys next time.